And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome to the Market Forecast. Happy Friday, everyone. Friday, January the 7th. I'm John. Thanks for trusting me with your time. As always, context, risk management, and patience are on the front of our minds and on our lips. This morning, 7:30, the unemployment numbers out. I don't know how they do the math, but the non-farm payroll, they were looking for an additional 400,000. Only 199,000. There were 210,000 on the last NFP. However, the unemployment rate was expected to be 4.1%. It was 4.2%. It came out at 3.9%. So some good and some bad news. Markets responding right now, and we're going to be looking at those in the charts very shortly. If you are already in the markets, hopefully things are going well for you. As always, we hope nothing for the best for everybody. U.S. equity markets prior to the numbers coming out were slightly higher in a very tight range awaiting the information. Again, NFP was expected to be 400,000. It came out at 199,000. The rate was expected at 4.1%, came out at 3.9%. Little worse than expected on FP, and the rate, again, a little bit better than expected. Crude prices continue to rally. Our WTI pushed above at $80 last night over concerns that if OPEC will be able to achieve its goal of increasing production over the coming weeks. Part of that has baked into it the fact that we've got a little bit low inventories, a little lower than average over the last historic numbers. So we always have challenges in trading. We always have ideas and things that we look for, and sometimes they play out, sometimes they do not. My goal is always to look for those asymmetric opportunities. Look for trades that offer opportunities that are asymmetric, so you don't have to risk a lot to realize some larger gains. It's not easy. As you get into this, as you do this for a while, it may become easier to locate those trades, to get into those trades, because they're going to be cheaper. It's the management of those trades that tends to be a little bit more of a challenge at that point. So always be looking to take a profit at some point, especially when the market has offered you an asymmetric opportunity. I kind of look at it like if I'm playing golf and every putt that I send towards the hole doesn't make it that far, none of them are going to fall. So you think about even in volatile periods of time, if we don't take profits, sometimes those opportunities can go away, and it's so difficult to know when or if to take those profits. You just have to be able to accept what the market gives you, take what the market gives you. If it continues in that direction, it's a whole new opportunity. There's always another opportunity coming down the pipe. That's one of the blessings we have of being involved in these markets, is they are opportunity creating machines. Opportunity creating machines, and we are always looking forward to those opportunities. There's my dog. Good morning, Lacey. And just a kind of a word here this morning. As usual, make sure you hit the lucky like button Share, comment, question, feedback, and heckling are always welcome. Make sure you subscribe to our YouTube channel. I'm going to try and make sure that we have some solid audio today. We got some new equipment hopefully coming down the pipeline here that'll take care of all of that for us. And taking a quick look at the VIX 1985, up just slightly from the close from yesterday. Dollar index 96.12, pretty much maintaining that level for the last couple of days. And the 10-year yield got a little spike after the NFP numbers this morning. It's up at 1.76%. So I'm going to say good morning to everybody as always. Chris, first in the room. Happy Friday to you. You win the prize this morning. PK, Brian, Jim, Nico, Drew, Jerry is awake. Hey, Jerry. I haven't seen you, I don't think, in a little while. It's good to see you again. Zerain, Janus, Alfred, Rob T, Terry King, Expediter Dean. There's a name I don't think I've seen before. Welcome, Expediter Dean. Jacori, good morning. Manuel Caesar, good morning. Brett, good morning. It's been away for a couple of months, so it's good to be back. Well, it's good to have you back, Brett. Sometimes it is good to take a nice little break. I took almost 3 weeks off over the Christmas and New Year's holiday. I felt like I was out forever, but it certainly, I believe, has opened up my eyes a little bit. Sometimes looking away, coming back, you can see things a little bit more clearly, and hopefully, Brett, that is the case for you. Sarah, happy Friday. Yes, absolutely. I'm going to be looking forward to maybe making some money early in the session today and then heading off to the weekend perhaps a little bit early. We'll see if that works out, and if it doesn't, that's okay. Main point, big ideas. Good morning, Vince, my guy. Good morning to you. George, Antoli, Ricardo, good morning. Mirik, Devante, good morning to you as well. Kevin Guy, Ralph Schrader, good to see you. Good to see you again. Cyril, good morning. Can staying patient be one of my strategies? Absolutely. As a matter of fact, you don't have to trade. Sometimes not taking a trade is a trade in itself. Al-Haji, good morning from Belgium. PD Legend, good morning. Snow in New York. Yeah, I saw this morning. I saw last night. You guys have another little bit of snow coming at you. JR, good morning. Brody, good morning. Brody reminds me of Jason Lee's character in Chasing Amy, if you ever saw that. His name was Brody in that. All right, way to go, Ralph. Started your funded account yesterday. Yeah. Good job. Good to see you are continuing to succeed. Hopefully that success will continue. Just take your time, be patient, and dance with the one you brung. It's not time to change things now. It's time to stay in that process that got you into that funded account. Very happy to hear that. Deg, good morning. All right. Now it's time to see if we are solid. Let's jump into the charts. Just want to make sure you guys can hear. Think everything is pretty good here. Yeah, Chief Brody, yeah, was the name in Jaws. And it kind of figures somebody named Nemo would remember that. Farewell and adieu to you, fair Spanish ladies. And now you guys are probably sorry that there's good audio since I started singing. Okay, enough fooling around. Let's get into the charts, starting with the S&Ps. We'll see if we can get to the open here in crude oil. Looks like it might be an interesting one for us. Volume and open interest continue. Oh, whoops, that's the wrong market. Consolidation inside extended trading hour range. We've got the range from yesterday. We are inside it. We are currently dancing and playing here with the weekly kickoff low, which is 47.98. This is a little bit low here. I'm sorry, 46.73. So yes, this is correct. Sorry about that. Shark bait. Hoo ha ha. Great, the nightmares are going to start again. All right. So consolidation yesterday. Consolidation, even so, it's seeming like it's going to continue today. We are inside extended trading hours. We lost 2,200 in open interest yesterday. So the volume was a little bit higher in futures. It kind of fell off the end of the day in the New York Stock Exchange. So there's some question as to the health of the downside auction here. We would like to see an increase in open interest on this move down. Again, an estimated loss of 2,200. Still testing and still working on finding acceptance or rejection at weekly kickoff low. That lack of open interest says there's kind of a lack of conviction down here. The one thing that does kind of stick out to me and sticks out to many others is the fact that after that big push to the downside, we've got pretty much just a dead cat bounce here. No real substantial bounce after that rout we experienced in the S&Ps here on Wednesday, and then in all the auction, in all the equity markets. So here's Wednesday. Here's our big move down. Yesterday opening, we closed the gap. We closed the previous gap. We tested to and through weekly kickoff low. We rejected it night before last. We rejected it yesterday. Are we rejecting it now? Remember, there's probably kind of a stack of buy orders that's supporting price at this level. The more often we revisit that stack of buy orders, the fewer buy orders there are going to be. So we're, I think, really trying to wait and see if there is a decision in longer time frame as to whether we're going to accept below weekly kickoff low. We know that there's plenty of weak structure down below there, but it doesn't matter until we start heading that direction. Pivotal level is today here in that weekly kickoff low, 46.73. We opening with a range, not probable right now. Do we have any overnight inventory? Not really. You know, we were above settlement. We've been below. We've been above. We've been below. Overnight inventory is not going to be something we're going to be looking for early in the session to create an opportunity for us. What's the non-farm payroll reaction? Well, we didn't extend yesterday's range, at least not yet. There's some digestion, I'm sure, that has to go on. And when the U.S. regular trading hours open, then we're going to see what the longer time frame traders are really starting to think. We're bringing in a little bit of volume here at 7:30. Good morning, Rick. Good morning, Fred. Bringing in a little bit of volume here on this 7:30 bar, of course, because the news just came out. A little digestion. We'll have to see what happens. The fact that we're inside value, well, inside range, outside of value now, suggests to me a little bit of patience. But I'll be watching that opening range trade this morning in the S&Ps, because that may be an opportunity for us to catch the longer time frame beginning a new adjustment in their inventory. Remember, weekly kickoff levels are levels that we're looking for longer time frame traders to adjust inventory. If I had to say, is there any inventory adjustment accumulating here, I would have to say that the market is holding buyers down there. I would have to say that there would be an accumulation against weekly kickoff low. Night before last, yet day before yesterday, we added 10,000 contracts. Yesterday, we lost 2,200. Could that be some profit taking from that move to the downside? Who knows? Who knows? point is, we've got an important inflection level that's going to be offering some sort of opportunity for us in this weekly kickoff low. Stay tuned as the market turns. Crude oil. Volume and open interest added 12,000 in open interest on this move to the upside. Look at the trend in volume as we continue to try and push this market higher. This is a healthy auction, ladies and gentlemen. Higher volume, increasing in open interest. This is, again, presenting as a impressive and healthy upside auction. Remember, the market's moving one direction on higher volume and higher open interest. There's still money coming in that direction. We've got, an overnight news-driven event yesterday that really just kind of accepted higher pricing and added open interest. So the acceptance above that weekly kickoff high really has us looking at these October and November swing highs for potential targets. There's plenty of space up to those levels, and these levels might be interesting spots for an execution or an exit of a long if we do manage to take a long all the way up to those levels. 81.73 and 82.05 are those swing highs. Well, let's take a look at this one, 82.13, close enough for rock and roll up there. So somewhere between those two levels is a potential new stumbling block or important inflection level where longer time frames may look for new continuation or a move in the opposite direction. We've been moving pretty strongly to the upside here for a while. Take a look at the 30-minute chart. So we have some overnight longs, but we're still in range and value. We've just opened up. Here's our 1-minute chart. Pretty big opening range. We're looking at 22 ticks. So that's a pretty large opening range. Not sure I'm going to be playing this opening range. Why? Because we're in range and in value. There's little change in the perception of value. Here's our big overnight move. Here's the consolidation that occurred yesterday. Again, adding 12,000 in open interest. If these are new longs, they're going to want to protect up here. Now, one of the last things I want to mention about the S&Ps, and in some of these markets, you got to remember today is Friday, and we've come a long way from the low on Monday to the high last night. It's a pretty significant move. We're looking at about $6 to $7. If there are profits that are still in the market down here, at some point, do you think we may end up with a profit-taking event? If that's the case, I would look for it to come back to weekly kickoff high before looking for any long opportunities. But I still believe it's the buying of weakness that we want to remain diligent in, I guess is the word I'm looking for. Because we do have upside structure. We've got a good, healthy upside auction. Pullbacks should be bought till proven wrong. And I think we're proven wrong at weekly kickoff high. That weekly kickoff high, 78.45. To the NASDAQ. Everyone, to the Batmobile. Okay. Again, we have an inside trading hours range here, okay? We have a dead cat bounce yesterday. We added 17,000 in open, or 17, not 17,000, 1,700 in open interest yesterday. So, excuse me, my goodness, 1,700 in open interest yesterday. So there is the evidence of, excuse me, of a healthier auction in the NASDAQ to the downside than the S&Ps. Look at volume. Volume has been increasing since we've been moving lower. An additional 1,700, not a big number, but at least it says there are still sellers willing to take a look down here. Now, we looked at these lows as a potential target for this push to the downside. We've achieved that. What's next? Are we going to push our way through those levels and come into all this space down here? And we don't have it present on these charts, but we know that there's structural weaknesses down below this level. They're only important when they become important. I see we have there's a 200 session simple moving average that we've got on this chart here that really, that's where we are right now. I'm not sure that's necessarily going to help us. A dead cat bounce is pretty much this. We have a big down day, and then the following day, it really just consolidates at the bottom of that big down day. It's kind of a vulgar term, like, if you were to throw a dead cat out of a window, it really wouldn't bounce much. But that's the term that's it. It's an actual industry term, if you can believe that, Terry King. So vulgar term. Sorry if you're a cat lover, but this is really kind of a dead cat bounce. Main point, when in the forecast here, we look at the daily and we look at the 30-minute chart. In my own trading, I focus more on the 30-minute chart and the market profiles. We put the volume profiles on the 30-minute chart here, really just to kind of to save time. I think there's more information that is provided in the market profile than in the volume profile, but just to save time for the market forecast here, we kind of focus on the volume profiles just to kind of give us an idea of different types of day types. All right, so inside, what else do we have here? It's almost like these equities were a deer in the headlights after getting knocked around on Wednesday. Here we go. So here's the Wednesday move. We've checked the point of control from the past here. We have another one just below. We have weekly kickoff low just below that. Actually, this is weekly kickoff low. This is the next level where I would be looking for longer time frame participation or a need or want to adjust inventory. So here's our move. Here's our dead cat bounce. We're still in the dead cat bounce. NFP reaction looks more to the downside. No gap. We're outside the value area now. Might be indicative of a possible more of a earlier trade, but because we're still in range, we're still in. This is where the market has found value. I don't want to trade in value. I want to trade when it extends the range and gets to an area where it's away from value, and then they'll have the market return back to value. So I'm going to try and suggest again, try and stay patient in these markets. Again, there's some decision making going on after NFP. We do have 3 talking Feds today. Who knows if they're going to be affecting the markets at all. Here's gold now. Wow, nice reaction here. Knee-jerking reaction off of the NFP numbers. This is the daily chart. All right, so we've got continuing testing weekly kickoff low. The knee jerk down through that today, I'm viewing as a somewhat of an aberration of a market process. Lack of liquidity, I think, is what extended that range so far down below that weekly kickoff low. Yesterday on the move down, though, we did add 11,000 contracts in open interest on higher volume. We're still relatively range bound. We've not yet accepted down below weekly kickoff low, but we've tested and we've tested and we've tested and we've tested. That volume and open interest yesterday it does increase the potential for new short bets coming into the market, new business. It's going to take more new business for us to continue and accept below this weekly kickoff level. So 1787 is going to be somewhat pivotal this morning. Here's the 30-minute chart. So here's settlement, 1789.20. Here's our push down on Wednesday. Here's Thursday's dead cat bounce, continuing. The number comes out. We're in range. We're in value. I didn't do anything on this. This is just how do you set up a strategy to respond to this? The fact that we looked below and rejected quickly, down below weekly kickoff low here, leads me to believe I still want to be looking for opportunities to buy weakness as close to that level as possible. Again, a lack of liquidity is what let the market go this deep down below it. I don't think it would have happened exactly the same without the benefit of the economic release that came out here at 7:30. So that's just my opinion. Not that it doesn't really matter. There was no overnight inventory, no gap, inside the range, inside value now. Again, try and stay patient. If we can get the opportunity down here near these lows, I like that. And just try and stay a little bit patient. Now, the euro is an excellent example of short time frame control. I'm going to show you this. Okay. Now let's start with the daily. We've been in this range really since the rollover. Even before the rollover was when we kind of established the range that we're still in. Still in short time frame range bound control. Where our tennis player is center court. He has been center court pretty much all week. Open interest. We added 2,200 in open interest against the recent downside trend. But we're still in an area where short time frame levels are likely to be respected. I want to show you a couple of things here. We have some overnight longs here. They may have adjusted slightly before the open here on the 7:30 bar. We had a knee jerk down towards that area, but we're still inside range. We're still inside value, and we're still quite possibly holding some overnight longs that put their heels into the dirt and held themselves back down to this level. Inside value, patience. Take a look at, we always talk about how short time frame levels respect short time frame controlled markets respect short time frame levels. The problem with that is there's usually a million short time frame levels with which to look at. Here we have last week's high. We have last week's low. Okay. Monday, the market opens, goes right to last week's low, a short time frame level, comes back up, looks point of control from Thursday before. Okay, the low back to last week's low. We take a look higher, we come up here, we trade almost to value area low from a couple of days ahead of before. We trade basically to the value area high from the previous day. The overnight takes us down to point of control and settlement from the previous day. We open in range out of value. We take a look. We pretty much cap things off just above value high from the previous day, and then we trade to the overnight low of the previous day, which also lines up nicely with a high volume node. Now we're still in short time frame control. There's a million levels with which we can look at. We can look at value low. That's what gave us our support after the number came out. We can look at value high, which was the previous, well, it was the overnight high. If we break out of this, we've got a point of control and a value area high with which to deal with above. We also have a swing high up here. We also have another point of control right here, just inside last week's high. So the nice thing about short time frame control is there's a lot of opportunities to limit risk, just too many entries, too many things to look at, too much information sometimes isn't a good thing. So try and stay patient. I'm going to let the market establish its initial balance, its first hour of trade, and then I might get interested. But for now, I've been saying that the euro has been very difficult. It's been very range boundy, and it's been really kind of on the back burner for me. All right, so here is the 10-year. Volume and open interest indicate a healthy downside auction. We are one-time framing lower. We are increasing in volume. We added another 5,400 in open interest on the downside yesterday. So we continue to build interest in the downside, continuing to bring in volume to the downside. It's more likely that this market is going to continue this auction until it starts to cut off volume and some of our participants decide they've had enough and they are going to start taking some of those profits. It's entirely possible today. Remember, it's Friday. We've gone a pretty fair distance this week, including the end of last week. 1, 2, 3, 4, 1, 2, 3, 4, 5. So all week we've been to the downside. I mean, you gotta figure there's going to be some profit taking at some point. Be aware of it. Sometimes those contrary moves can be vicious. And, by no means am I guaranteeing that is going to happen. Take a look at the 30-minute chart. Okay, we've got some. Oh, I just screwed that up. We've got some. There we go. We've got some weak upside structure, weak structure to the upside, holes, naked points of control. They're all over the place to the upside, which also leads me to believe the visual targets that are up there are going to come into play at some point. Maybe not necessarily today. No overnight inventory, no gaps, no nothing. It took the market to wait until 7:30 before we really kind of ranged the overnight session. We arranged yesterday's session. We've got our knee jerk to the downside, coming back into range and value. If we can't hold, if we start taking out these references above this gap up here, okay, if we start taking out this gap, then I think that might be enough to create what we think might happen, which is always a possibility, is we may have a short covering rally. It's possible. Be aware of it. If you're looking for shorts, which you should be, because this is a healthy downside auction, make sure you're managing your risk well. So, yes, Simon, the points of control from previous sessions that are left hanging are naked points of control. They are visual levels. They are levels of comfort. Lots of trading occurred there. It may happen again. Okay, let's go through the net gas here. All right. So we've been range bound in the net gas. It looks like we are currently testing weekly kickoff high. This is something that I'm always looking up for opportunities to trade near these weekly kickoff high levels or low levels, because I believe the longer time frame are going to begin to take over the marketplace when we get to them. It doesn't always happen, the very least, it allows me to limit my risk. So we lost open interest, 1,300 on higher volume yesterday on a test of weekly kickoff high. It seemed like, maybe some of the longs decided they were going to take some of those profits, and that kept us from getting up through weekly kickoff high, which was basically a direct hit yesterday for resistance. It almost seems like it's sneaking up on the mechanical sellers that we're seeing up there. By mechanical sellers is it's worked 1, 2, 3, 4, 5, 4 times. When short time frame traders notice something that's working over and over again, they're going to keep doing it until it fails. The longer we have mechanical sellers up here, the shorter they're going to get, and the more likely we're going to see a push up through the upside. But again, it's going to take new business. By new business, I mean we're going to have longer, stronger buyers come in and move this market higher, and that can change the whole picture of things. Right now, we're range bound. If we accept above this weekly kickoff high, that may change the market from range bound to a potential continuation to the upside. That's why I say the market seems to be trying to sneak up on those mechanical sellers up there. Here's the 30-minute chart. So again, we have lots of gaps. We have lots of naked points of control above. I keep doing that. And then I'm looking at it like it's the natural gas. So here we are, 1, 2, 3. Finally, we get one in regular trading hours and attempt to see what's going to happen up here. Again, this is a nice opportunity for us to limit risk. If we were awake at 5 o'clock in the morning, night before last, and we saw a price up against this level, it really traded right to it. We could have had very limited risk, and the rest of the day was pretty much pushed to the downside. It would have been a great trade. We have that opportunity again now. The market has looked above, but right now is showing signs of excess and rejection above that level. Here it goes. Okay, so the nat gas earlier in the session today, looking at this, I thought, all right, well, we're going to stay patient. We had some longs, they got out. We got long again, they got paid when the number came out. Now what? Who knows? All right. All right, so we've got about 6 minutes before the open. I saw that there were some questions, and my good friend Fred Decker talking and answering some of those questions for us. And I love the definition of the dead cat bounce. What info would market profile give you over volume profile? Because market profile is based in time, and volume profile is, of course, based in volume. The nuances that are created through time give you, I think, a lot more data points. In the market profile, you can see when there's excess at the extremes by the existence of single TPOs. It becomes a little bit more obvious in saying, okay, the market went higher but was swiftly rejected because we have those single TPOs and we have that excess up there. There's also anomalies. There's afternoon pullback highs and lows. All of these things are visible on the market profile, not necessarily the volume profile. So, and you can see them on a 30-minute chart, but for some reason, the organization of the market profile just speaks a little bit louder to me. Volume profile is good. I personally prefer the information that I get from the market profile, and there's oodles of information and time that we can spend talking about that. Yes. I like to view time too. Fred, that's a very good way to put it. Market profile includes time and implies volume. Volume profile includes volume but doesn't imply time. For acceptance and rejection, I like to view time. Very good way to put it, Fred. Thank you for that. Jimmy, how do you identify a breakout versus range bound? Price action or longer traders coming into the market. It's when you're in a range bound market, let's say the range is for 5 or 6 days, and you have an opportunity to trade outside of that range, that's a potential breakout. The rule says if you're range bound, you fade the extremes. If you break out from balance, you go with the breakout. It's not that easy. There's timing, there's participation. Sometimes I'll kind of watch the dome at that point, because if we get a breakout and the dome dies and nobody seems to care, that just tells me that this breakout is probably not necessarily going to be fruitful. So I'll get out of it. I time stop breakouts. I don't like to let the market come back against me and take money if it's a breakout type of situation. I believe breakouts should happen quickly, and hopefully you can catch those. But boy, it seems like 70% of breakouts you just typically usually fail. Yeah, next week we've got Top Step Foundations. I'm going to put the link in to sign up for it. Now, I did this basically back in September as kind of a back to school thing. It's the basics of the futures markets, the history of it, how they work, why they were created, what our role is in them. Look at the platforms, at some of the psychology of trading. It's 4 weeks. Hopefully, as entertaining as it is informative. It starts on Monday. And don't worry if you can't catch them all. They are going to be available to review, for as long as you want them. Eventually we're working on how we're going to set that up, but we want to get them and the recordings out to you as quickly as possible. I'm looking forward to it. There's nothing I enjoy more than spending time with traders and, in any way that I can, helping them improve their performance. That's what it's all about for me. And we're going to go, we got about a minute and a half here. Stay humble, grateful, and creative today in your trading. I always look forward to seeing everybody back here on Monday morning for the market forecast. No recap today, as usual, on Fridays. So get out there and trade well. See you in the proverbial pit in about 1 minute. Have a great day.